let's paint this picture in our heads. You're going to the bank, okay? And you were letting them know, like, hey, I want to transfer ownership of my home to this other person. They're going to give me money. And there's this big, huge mob guy that stands in the way, and that's the IRS. And it says, no, Jim, that's my house. That's our house.
Our house. Right,
You can't sell our house without my permission until you give me my money. So with the discharge, just imagine that big mob guy is standing, he's backing down, letting you walk through the door to get the money, but he's still at the door to make sure that before you go put it in your account, you give him his cut out of it.
That makes sense. Welcome to the Tax Relief with Timalyn Bowens podcast. Are you behind on taxes? Is the IRS threatening you or your business? Are you overwhelmed and confused about how to resolve your tax issues? Let's join Timalyn as she explains your options and how she may be able to help. Timalyn Bowens is America's favorite EA.
This is episode 4, and we are talking about how to sell your home with a tax lien. Now, in episode 3, we talked about what a tax lien is, how it affects you, but a common problem that I see is I have taxpayers that are unable to sell their house because the IRS has issued a lien. And you know, right now we have a seller's market, so if you can sell that home and walk away with profit, I most definitely want to help you be able to do that. Today in the studio, I have my producer, Jim Ray.
Timalyn, how you doing?
I'm doing great, Jim. Thanks for joining me for this conversation.
Absolutely. Glad to have you.
So with these tax liens, Jim, it's funny to me because I have, hardworking people, they have some equity in their home, and, they can walk away amazingly right now selling a home, but they find an amazing realtor, get it on the market, doesn't even last a whole week. But then when we go and run the title, boom, there it is, a tax lien that they completely forgot about because they're like, oh, that doesn't matter. We own a home.
Right. And that was years ago.
Yeah, that was years ago. We don't have to worry about that.
Full stop.
Full stop. So the thing that's funny to me, though, is that the title company or the mortgage lender, even realtor will say, oh, well, just go back to your tax person and have it taken care of. But if the tax person could take care of it, it would already be gone, right? So what I see is, my mind is always thinking about ways to make money. I'm like, that's a sale missed. That's money that this taxpayer could have went away with and solved the IRS problem. So I realized, I'm a tax nerd. Everybody doesn't understand how to remove this tax lien to sell their home. So that's why we're going to focus on this today. But if you're listening right now and you don't own a home, guess what? Towards the end, I'm going to tell you how you can remove a tax lien as well. So you want to make sure you stick around for that. But again, just a brief recap. What a tax lien is, it's when the IRS comes in and they notify everybody via a notice that goes to the county clerk's office, we have dibs on all this person's assets. Now, does that mean they're going to come in and take your home? Not necessarily. They have the muscle to do so, but that's not what they always go for. So when they come in and take possession of your home, that is called a tax levy. So a tax lien says, hey, we have dibs, which is the precursor to a levy, which says, hey, this is ours. Get lost because you didn't want to give us our money. So when we look at how to sell your home with a tax lien, there are a couple of different ways that we can look at doing that. If it's going to be a pretty straightforward situation, there is a number that you can call to verify how much is on the lien, because as a reminder from last episode, which I highly recommend you go check out, the amount on the lien may not be the same as the amount that you owe. So your tax lien may actually be, to keep numbers easy, let's say $20,000, but the amount that you owe is $30,000. So before going through the process, you want to make sure you understand how much is actually on the tax lien. Now, if you know it's there because a title company found it or a mortgage company, they should be able to provide you with a copy. But you can call the centralized lien office at 1 800 913 6050 to verify what the amount of the lien is, how much longer it's going to be there, and to get a payoff amount.
Timalyn, if I could jump in real quick. If you're listening to this podcast, depending on where you're listening to it, there's going to be show notes, which is just a kind of a summary of everything we're talking about today. In those show notes, I'm going to put a link to episode 3 so you can easily link back to that. But I'm also going to put that contact information in there for the listeners. So rather than having to scribble it down right now and stop and re-record and review the audio, just know that in the show notes that information will be available to you.
Yeah, thanks for mentioning that, Jim, because you guys know you've been listening to me now for a few episodes. I get really excited about tax stuff, and I just, I'm here to educate you all so that taxes don't have to ruin your life. But I get really excited, and I may forget to say, hey, jot this down. So all the important stuff will be in the notes. But getting back to it, this problem is we can't sell the home. Or I'll give you this bonus too. What I'm about to explain to you will also work if you are the person that wants to purchase the home. Because I'm going to tell you about an application that you can fill out, which is the application for certificate of discharge of a property from a federal tax lien. Because let's face it, if you are having an issue with the IRS, you probably aren't feeling at the top of your game. It can make you feel sick to your stomach. You're losing sleep at night, and you don't think that there's any possible solution. So that seller may not be thinking, oh, let me help the buyer out. This information is going to be important to you as the buyer as well. So with this lien discharge, there are a couple of ways that we can do it. Really, it's going to depend on how much equity the seller has in the house. Like I said, if it is pretty straightforward and we verify the amount of the lien, we can get the mortgage company and title company to show how much you would walk away with and report that to the IRS. But guess what? Just like anything else with the IRS, you have to have your receipts. We can't just call them and tell them a certain amount. You have to have the proof.
In Timalyn, from a technical standpoint, what actually does it mean to have the lien discharged? Does it just go away? Does it get ignored? Does it get put in abeyance? I mean, what are you actually doing when you're discharging a lien?
Yeah, that's a great question, Jim. So when you do a lien discharge to be able to sell the house, the IRS is giving you permission to make the sale, but they are securing their interest in it. So with that being said, let's paint this picture in our heads. You're going to the bank, okay? And you were letting them know, like, hey, I want to transfer ownership of my home to this other person. They're going to give me money. And there's this big, huge mob guy that stands in the way, and that's the IRS. And it says, no, Jim, that's my house. That's our house.
Our house, right,
You can't sell our house without my permission until you give me my money. So with the discharge, just imagine that big mob guy is standing, he's backing down, letting you walk through the door to get the money, but he's still at the door to make sure that before you go put it in your account, you give him his cut out of it.
That makes sense.
So with the discharge, it's still there. And another variation of this is subordination, where the IRS allows another creditor to step before them. So if you have equity in the home, but you still owe on the mortgage, the IRS will allow you to pay off the mortgage company so you can sell the house. But then again, they're still there before you get to put your money in your account to make sure that you're paid. Now, if you're like, oh yeah, that's great, it sounds good. The IRS, you have to have receipts, you have to have proof, and they're not going to let you write the check. Because let's be honest, if you were just going to write them a check, we wouldn't be here. right? Whether that was your ability to do it or if you were being negligent. So once this application is filled out, the actual title company is who is going to send the check from your proceeds directly to the IRS with the payoff amount.
That makes sense. So again, they've got their money, they've got documentation of what it actually sold for, and hopefully that check that they receive or that portion they receive satisfies their interest in that lien.
Absolutely. So what happens, they send information with the payoff amount and they let you know when we receive the check, it will take this many days and then we'll drop the lien.
Perfect.
So, then you're kind of stuck in the middle because you have the title company waiting on you, you have the IRS waiting on you. And then for me, when I do the power of attorney for my clients, I'm in their shoes for it. I'm in the middle of doing the dance too because I have the title company reaching out like, hey, did the IRS cash that check? And the IRS is like, hey, are you sending that check?
Well, and that's interesting because that application from discharge can be made by the person trying to sell the home. I mean, that's possible, but a lot of times this is complex, it's technical, and they just really don't know how to go through the process. So that's when they could actually bring you into the situation, and that's when you were talking about the POA. Do you want to explain kind of how that actually works?
Yeah, absolutely. So this application is a tax form because it's going to the IRS, and there is actually a whole section devoted to if it's a power of attorney filling this out. And what would happen when I fill that out for a client, I actually attach a copy of the 2848, which is the tax power of attorney, to the application so they know that I'm the one filling it out. And then I put whose interest I have. So I've done this for people that are the buyer, and I've done this for people that are the seller. So that information is there. And as I mentioned, they want proof of everything. So you can't just call them and say, hey, I'm selling my house for $200,000. I only owe $100. I owe you guys $50. That's not going to cut it. There are times when I've done this application. I was mentioning to Jim before we started recording, I had an 86-page application. So when people ask me, can I just do this myself, Timalyn?
Technically, yeah.
Technically, yeah, I could rotate my tires, do my brakes, all that stuff. And, I'm an only girl, and my dad wanted to make sure I knew how to do that stuff on my car. But is it going to be efficient if I do it? No. So, no bias at all. But, when you don't do something every day or all the time, I could cut my husband's hair too. I'm not a barber. I may not be the person that he wants to cut his hair.
Right. But technically, yeah, you could do it.
Yeah, technically I could do it. So, I mean, there is YouTube University and all that. But with this process, it typically takes 45 days. We have to think right now we're in a seller's market. We don't have a lot of homes for inventory. Are you going to have somebody that's going to wait the 45 days? And that's if you know what you're doing. That's if I'm doing it.
Right.
If you have to teach yourself all of this, how long is it going to take you to get the application complete? And then we have to add 45 days. In the IRS, I think it's pretty common knowledge there's a backlog. And they are understaffed right now.
Well, and if you're the seller, you're assuming the buyer's going to wait around for this.
Yeah.
So saving time, being efficient is important in this transaction.
Yeah. And if the IRS catches a mistake with the application, it's not like as soon as they find the mistake, they're going to call you. It might be 45 days before you even realize there's a mistake. So now we've lost the opportunity to get this house sold, to get rid of this mortgage for you, to get rid of this lien. I've had clients who in this seller's market have been able to pay off an over $200,000 mortgage, pay me, because I'm here to fill the tax literacy gap. But when I do the work for you, there's an investment there.
.com, not .org.
Yeah, .com, not .org. But they were still able to walk away with like $50,000 because this is something you definitely want to take advantage of if you're looking to sell. But let's talk about the application a little bit more. So, like I said, it's 86 pages. It's not going to be that for everybody because the IRS is going to want to know realistically what can you sell this for? Almost like, a business owner. You can't just say I made X, Y, Z. They want to see the 1099s. If you're under audit, they want to see the bank statements. So you have to have an actual valuation that's been done by an appraiser. How much can we actually sell this for? If we're already in the closing process, they want to see that contract. Now, you guys know I stay in my lane. I'm not a realtor, but if you've ever sold or bought a home, is it the HUD one that has like the breakdown of what the selling costs
I believe
and all
so.
those things would be? So make sure you get that from your realtor, not from me. I know what it looks like, but they would provide you with that contract. They want to see that information. They want to see how much property tax has been paid for it. And they want to see that you actually have a buyer lined up, because this whole discharge is pending on whether or not you can actually make the sale. Because like I've said before, the IRS, they are not here to ruin your life, make it worse. They just want to make sure they get their money. So they're going to do whatever they can to help you get the money to pay them.
No, that makes a lot of sense. I want to come back to one thing. You mentioned when you step in, when somebody contacts you, you have them sign a tax POA. Mm-hmm. And if you've ever dealt with a power of attorney, that's not giving you power of attorney over everything. That's very specific. That there's a lot of limitations on what that power of attorney is. That is really for you to handle this specific issue on behalf of that client, right?
Absolutely. So I'm glad you brought that up. I usually tell somebody, signing on with me, like, I can't do anything with your will. I can't do anything with your property. This is for specific tax reasons. And even with on the 2848, there are limitations to that. And you, as the taxpayer, set those limitations. For example, we do not check the box that allows me to sign anything for a client. So I can go in and negotiate, but anything you agree to with the IRS, similar to your tax return, you still have to sign. So even though I have the power of attorney to negotiate for you, the true power is still within your hands to make the decisions. And even on that 2848, it is limited to the tax forms and the tax years that we put on it. So typically for me, when I have a power of attorney for somebody, we go back a few years past where the debt is. So let's say, for example, the debt's from 2017. I would do power of attorney to 2014, 2015, just to make sure there are no skeletons in the closet, there are no surprises. And then I'm going to go usually 3 to 6 years forward, because, this problem, it didn't happen overnight. So it's probably not going to be fixed overnight. I don't want us to have a hiccup a year from now. Maybe a person's on a payment plan and missed the payment. If I don't put it a couple of years forward, I have to call them so I can talk about it. But even worse, I won't even get notified that that payment was missed. So that's typically how we do it. And like I said, the taxpayer ultimately still has that control, because I can't dibble and dabble in everything. They set those limitations up front.
And like you said, you tend to stay in your lane, which is the nice thing about working with you, is that you know this area of tax very, very well. And you do some other things, but this is really your world. You're not trying to deal with their will or their estate or anything else like that. This is a specific transaction, and the power of attorney is for a specific set of activities related thereto.
Yeah, absolutely.
That's awesome.
I have people say, well, can't you help me with this or that? And it's like, I have attorneys I can connect you with. I have financial advisors. And even with this, like, I know realtors and mortgage companies, but, I don't step on their toes.
No, that makes a lot of sense. If somebody is listening to this and they're thinking, okay, you know what, this is my situation, and yeah, I think 86 pages sounds kind of intimidating. How would I get in contact with you? What's the best way to kind of get you engaged in that situation?
Yeah, absolutely. So I do all tax relief services through Bowens Tax Solutions. I am the owner and lead accountant there. So if you go to the website, which is www.bowenstaxsolutions.com, and that is going to be in the show notes as well. Once you get to that site, you will see the button to book a call now. And I encourage you to, don't take my word for it. You can scroll down, learn more about what the company does. You can learn more about me. I look at Google reviews, go look at the Google reviews to see people that have had this same situation. But once you hit that book now, there is a tax relief evaluation call. And you want to book that call. One, I can do this almost in my sleep now, but that doesn't mean we're going to be a good fit to work with each other. And I mean, we're all human, right? So that call really is to make sure that you would qualify for this type of service and to make sure that we're going to be a good fit to work with each other.
No, that makes perfect sense. So we've talked about some subordination. We've talked about the application for discharge. And we've talked about, yeah, you can do it on your own or you can bring in Timalyn to do it on your behalf. Ultimately, though, what you're trying to do is help the homeowner realize that you can actually eventually or potentially sell with a profit.
Yeah, absolutely. What I see happen is, I mentioned we have the person selling the house and everything's going perfect. Then, bam, we're smacked with this tax lien that you forgot about, didn't know existed, because I've seen that happen with married couples. Then all they want to do is get rid of the tax lien. And there are people out there that know that taxes and tax liens intimidate sellers. So what they do is they come in and they offer to purchase it at a low price that will take care of the tax liens. The person's thinking, okay, I don't have to deal with the IRS anymore. But then what? What's left for you after that? Filling out this application, verifying the amount of the lien, and then selling empowers you to walk away with a profit. So, for example, like I mentioned the client before, had they just sold that for the amount of the tax lien to get that out of their hair, it's a seller's market. Where were they going to move after that?
Absolutely.
With
Absolutely.
what money? When you become in control of your situation, you get to dictate the cash flow. You get to still ask for, lack of a better word is the way I lined that up. You get to ask for your asking price.
Yeah.
To make sure that, okay, I have this taken care of. I know how we're going to remove this tax lien. I'm not going to owe the IRS. I'm going to take care of the bank. And now I actually have money to look at another property or live however I want to live. But you're in control of the situation when you do it that way.
Right. Don't let fear, control your steps. Don't put your. I think you said it in some of the earliest episodes, episode 1 and 2. Putting your head in the sand, being an ostrich, and hoping it goes away. That doesn't work. And the what did you call it? The
pray and wait
the
does
pray
not
and
work.
wait does not work in this situation
Yes.
either. No.
I'm a big believer in God, but as I say, faith without works is dead. You gotta have some sweat equity in here. Like I said, it's not an issue that happened overnight. It's not going to be removed overnight, but this one can take 45 days and you walk away with some money. So definitely it's something that you want to take a look into. This same process applies if you maybe aren't wanting to sell, but you have equity in your home and you want to refinance. Guess what? If you want to refinance and the mortgage company sees that title, that mob bully, he stepped in the way. But if you tell him you want to give him some money, the bully is going to be there with his hand out and disappear once he's paid.
Right. So, I mean, this is really a solution to a problem that doesn't have to be a giant problem. I mean, with your help, obviously this can be minimized and possibly even eliminated, allowing everybody to move forward and start fresh and just kind of get on with life, which is a great option to have. Timalyn, at the outset of this, we talked about there's another option here. Well, what if I'm not trying to sell my home? What if I don't worry about that, but I have a tax lien anyway? And you said you might have some tips or some ways to actually get rid of that tax lien. Let's go ahead and transition into that segment.
Yeah, absolutely. Because unfortunately, everybody is not thinking about how the tax lien is affecting them if they don't own a home. Maybe they're like, oh, I don't have to worry about that. And then things happen in life. You're like, oh, now I do want to buy a home. Not only will you not be able to sell your home, you have trouble buying one too if you have a tax lien. So, the tax lien, when we say it attaches to all of your assets, again, the tax lien is a precursor to the levy. You got money in your bank account, you you got 401ks, the IRS can seize that. So we want to make sure we get the lien removed. Again, I think everybody should go listen to episode 3, but just real quick here, removing the tax lien. Again, we're going to want to call the centralized lien office, which is 1-800-913-6050, also in the show notes for you, and verify the amount of the lien. If we can get this tax debt under $25,000, you can request, which would be a lien withdrawal, to have the lien withdrawn. Now, similar to buying a house, when you have a debt with the IRS, you got to actually do some work and put in some payments. You can't show up and you haven't made any tax payments for 5 years and then be like, hey, can you do a withdrawal? Because they're going to be like, why would we remove this for you? So you are going to have to actually make some payments. And you are going to have a direct debit so that they can take the payment each month. Because again, they want to make sure they have a secured interest. We don't want you closing all bank accounts and you're supposed to send us money every month and then you disappear.
Right.
So
it's a help me help you scenario, right?
Yeah, absolutely. So for people who are over that $25,000, if you go to americasfavoriteea.com, there is a back tax negotiation checklist. And with this checklist, it walks you through the steps of, or not the steps, it walks you through the items you need to be able to negotiate. Because, you know, you may be listening to this thinking, the IRS wants me to pay like $435 a month. I can't afford that. There are ways for you to negotiate that. So with the checklist, you know, the first thing you need to do, I'll keep saying this probably every episode, you need to verify the amount that you owe. You need to check out your transcripts. You need to understand how much time they have left to actually collect on certain debt. What types of penalties and fees are there? Now, again, this is something I have clients come in and they just have me do that. I do a transcript investigation. We do have to do the power of attorney to do that, but just like I mentioned before, the client sets those limitations. If you only want me to do the investigation, that is something where we do the POA. We don't keep it on file. I go get all the information I would need from the IRS and do the analysis for you. So then you have your game plan for how you're going to settle this debt with the IRS. We get it under $25,000. And now, again, you're empowered to go ask for the withdrawal because you actually we see light at the end of the tunnel.
Now, would they withdraw the entire amount of that 25,000 or a partial, or kind of what's the objective there? I guess if you're requesting that, what should the proper expectation be?
Yeah, so with that withdrawal, essentially now you can breathe because you can go get funds from other sources. And when I say that, I don't mean like a job. So now when you have a lien, it doesn't go on your credit score, but it can affect your credit. Because if you owe the IRS, you have to remember, it's not just us that knows they're aggressive. Other lenders know they're the most aggressive too. And 9 times out of 10, the IRS is going to beat out everybody else that you owe. So if I know that person A owes the IRS $10,000, I don't want to loan them 20 because if something were to happen, the IRS is going to get their money first, and I'm just left out in the cold without my money or interest back.
No, that makes a lot of sense. So, you know, again, that the whole idea of the withdrawal really kind of it helps everybody, right? It helps you as the person who has the lien, but it also helps if you're going for additional credit or trying to buy a new asset down the road. It allows them to feel a little bit more secure in granting you that loan.
Yeah, and absolutely. What a lot of people don't realize, you know, we've had an uptick in entrepreneurship, not just LLCs, but people being sole proprietors. If we look at things like Lyft drivers, Uber, just the whole freelance and gig economy, a lien is not only going to attach to a house, which I think we've busted that myth wide open today, bank accounts, but even your business assets and accounts. So you may think, okay, I got everything good with my business. I just got to get my personal together. And if you have an issue with the IRS, it's all connected. So we can't even look at selling business property because guess what? That lien is going to pop up. We can't look at the new trend now as build your business credit.
Right.
That tax lien is going to pop up. So, the withdrawal, like I said, you can breathe. You have the game plan. You have that removed. So now you can utilize other funds. And ideally, what the IRS would want you to do is utilize those other funds to go ahead and pay them off.
No, that makes a lot of sense. And once again, if people have listened to this and they're thinking, yeah, I think I need to pick up the phone or get online and contact Timalyn, once again, what is the best way for them to do that?
Yeah, they're going to want to go to the website again, which is www.bowenstaxsolutions.com. Go ahead and book that tax relief evaluation, because what that does too, people get so, it becomes urgent, even though it's been sitting there for 3, 5, 7 years. But guess what? If you were hearing this and you want to talk to me immediately and you call, you're not prepared for the call. You want to make sure you go to the website, book the tax relief evaluation, because when you book that call, you know that you have my attention or a team member's attention for 20 minutes, and we're going to send you what you need to have prepared for the call. Because what good is the call if you can't answer questions like how much do you actually owe? What did your last IRS notice say? So you're going to call, and it's not going to be an efficient use of either one of our time. And then that allows you to kind of pack it back in the sand and do that pray and wait. So
Exactly.
We want to make sure you're ready for the call. Go to the website so you know what you need for when we actually talk. And you know that you're going to have the full attention of the person you're talking to.
And again, that website is www.bowenstaxsolutions.com.
Mm-hmm. So, we mentioned levies. We're going to talk about that in episode 5. So make sure in 2 weeks you tune back in as we go over that. Ideally, we're not going to have to deal with the levy because we're taking care of the lien. But just know this, if you don't take care of that lien, the next step for the IRS is a levy. But I'm going to walk you through that because, as America's favorite EA, I'm here to fill the tax literacy gap, one taxpayer at a time. Would you do me a favor? Would you be sure to share this on all your social media sites? Because 1 in 50 taxpayers has an issue with the IRS. So you never know who needs to hear this. I'd like to thank you for taking the time to listen today. I'd like to thank Jim Ray Consulting Services for helping me get this message out to you. I hope you found the information helpful. Did you know 1 in 50 people have a tax problem? Please share this episode with your friends and family because you never know who may need help. Again, thanks for listening. Hey, just as a reminder, this podcast is for informational and educational purposes only. It provides a framework and possible solutions for solving your tax problems, but it is not legally binding. Please consult your tax professional regarding your specific tax situation.